Welcome to the All Things Wildfire podcast, where we delve into the latest trends and hot topics in protecting properties against wildfire. So sit back, relax, and join us as we arm you against disaster. Hello and welcome to another episode of All Things Wildfire. I'm really excited today. Our guest is someone that I've known for several years. I was announcing on our call this morning that I always enjoy interacting with Alex from Hoffman Brown. I'm going to let Alex introduce himself here, but I always like the way that your mind works. You always struck me. The first time I met you, I remember we went to lunch together. I think OP was there as well, and Steve, the then director of Hoffman Brown, he was sharing with us that he's got this new guy. I think he called you a kid, you know, about Steve more than you. Yes. He's got this new guy and he wanted us to meet you. And I was so impressed with the way that you think. I really enjoy interacting with you. So I'm really excited to see your mind here. But if you wouldn't mind, start off by introducing yourself. Tell us a little bit about your background, what you do and how you do it.
Well, thank you. Alex Rosenfeld with Hoffman Brown. And I think you should talk to my wife and my daughter about
exactly.
my mind working, because their opinion is it does not work at all. But I'll go back. Alex Rosenfeld with Hoffman Brown. I've been with Hoffman Brown approximately almost 8 years. And I'll just go back to my insurance history, not before, because I would bore everyone to death. But I started probably about, I want to say, 27 or 28 years ago. I started at an MGA in San Diego doing product management. And then I moved to Columbus, Ohio, product management for Nationwide. Then Miami, Bristol West, and then ended up doing product management for both personal and commercial lines for Farmers Insurance for about 9 years. So did product management for about 22, 23 years, responsible for P&L for give or take 5 to 6 states, depending on the year. Mm-hmm. And then I moved to the brokerage side. I spent 3 years approximately with Marsh, 2.5, 3 years with Marsh, and I've been lucky enough to be with Hoffman Brown for 8 years, work with Steve Brown, learn from Steve Brown, and that gives you an idea of how young I am in reality.
I didn't count the years. So
thank you.
I think it was like 10, somewhere in there.
Thank you.
Yeah, so you got your start in insurance then. What year was it when you started in insurance, to give us a feel for how much the landscape has changed?
Geez, I would probably say 1997,
yeah,
1998.
Late 90s. Wow.
Yes.
Wow.
Yes. So it's been a little while. Not too long.
Yeah. And so today, what is your insurance practice? What type of lines are you writing? What type of clients do you work with typically?
Well, Hoffman Brown does property and casualty, both personal and commercial. I focus more on the personal side. So we do focused on the high net worth market, emerging wealth market. We do the basic, the homeowners, the automobile, but we do various homeowners around the state, outside of the state, because of the type of clientele that we have. But not only do we do the homes and the autos, we do your collectible automobiles, we do your fine arts, your art collections, very large art collections. We do jewelry, I mentioned car collections. We do the toys such as aircraft, watercraft, and ultimately is focusing on the family itself, making sure that they are protected from the property perspective, and as important, or probably more important, from the liability perspective. And that entails trusts, LLCs, that entails children going to college, right? Making sure that they are protected, because ultimately everything flows down to the kids. So we need to make sure that everything is tight as much as possible, and there are no gaps.
Yeah. You know, when people talk about high net worth insurance, you oftentimes hear the word family used, protecting the family. What unique protection requirements are there for high net worth individuals? Why do we find ourselves talking about the family?
Because families, people, individuals put a lot of time and effort on building their wealth, right? And then obviously the wealth goes from one generation to another generation. So we need to make sure that those generations are protected, and the hard work that a certain individual puts in we need to protect that. And that means you have homes that are placed on under entities like LLCs or trust to protect the estate, right? You have valuable articles, you have fine art collections that are in estates, right? So you need to make sure that when you're writing the policies, all of the named insureds, all of the entities are called out, not only on the policies like on the homeowner's policies or a collectible car policy or a valuable article policy, but also on the umbrella. You have children that go to college and they don't have a renter's insurance, not so much because of the personal property that kids may have at a dorm, right?
Right.
Because ultimately that may be low, but also from the liability perspective, if they go to a party or if they have a party in a frat house or in their dorm and something happens, you need to make sure that that liability is there for the kids. And probably you as a parent, you're going to co-sign. So you're on it, right? So you have to be protected because ultimately if that child does something wrong and they get sued and they lose the lawsuit, your wealth ultimately is going to come downhill and everything that you've worked for, that goes awry, right?
Look, I love this type of conversation. I think more homeowners need to get some takeaways from what you just shared, Alex, where, of course, high net worth clients are going to have these products because there's so many layers of protection and they're protecting their wealth. But for the average person, we could still think about some of these things, right? We can still think about some of these added layers of protection, whether it's a trust or an LLC that needs to be formed to add these layers of protection. And, you know, I think back when you gave the example of the college and the dorm and the frat party, I thought to myself one day, my children will always and forever be an extension of my liability. And that's frightening to think about. My daughter got into a car accident and I watched it happen and it was frightening. And the car that hit her was a police officer off duty. And he was a very nice gentleman, but it could have been someone different. Okay. And so this person could have sued us, impacted us because my daughter made an illegal turn. But then on top of that, she had friends in the car. And these children, teenagers, were also a little sore. And I thought, oh my goodness, what is going to happen to me? And, you know, wealth is relative, right? I mean,
Exactly.
$50,000 is a lot, right? But so the reality is there are certain protection measures that we could all learn to utilize to add these layers of protection. And I love that the high net worth clients, probably over generations, have been taught this, and they need to use it because it's a wealth producing piece that helps them keep their wealth. It helps them keep their wealth, and so I love that.
No, absolutely. And I mean, we started talking about the high net worth and the market that I focus, which is the market that I focus on, right? But what I just mentioned and you mentioned, it does not only apply to high net worth. It applies to all of us. I'm personally a middle market person. I have a daughter going to college, so I have a renter's insurance. Again, not so much for her personal property, for the liability, because I go ahead and I co-sign. So if something happens, they're also going to go after me. And everything that I work for, whether it's a little or a lot, it's taking hard work.
Could be exposed.
Right? And I don't want to be exposed. I want to take care of the little bit that I have. And to what you were saying, for example, having conversations about the automobile insurance, having uninsured, underinsured, because you had probably a policeman hit your daughter. Hopefully they have their current insurance companies. But here, especially in California, there's so many people that have minimum limits or no limits. So at that point, you are there. So it's also the education that you provide. Forget about the high net worth, but that you provide your clients. It's the advice, the education that you lead with in order to make sure that everyone is fully protected to their best of their ability. And we as brokers, our job is to advise and to protect the clients as much as we can to their comfort level. That at the end of the day, that's what we should be doing.
I think
Yes.
that can be such a difficult role, right? I'm curious about how we can do a better job of educating our clients on the type of risk, or just our friends and family, right?
Mhm.
Anybody who's listening to this, because I know every time I talk to my insurance broker, she scares me about a new thing.
That's right.
Yes.
She says, "Have you ever thought about what would happen if this happens?" And I said, "This is why I don't call you."
Yes.
Because every time, so I'm curious, how do you balance the need to educate your clients, but also I think today's consumer more and more is buying more and more things and products and services on the internet.
Mm-hmm.
And I see this all the time. You talk about California being underinsured for liability coverage. I love to do this exercise, and people listening can do this at home as well. But I like to ask people, what is your premium for your car insurance? And most people know within,
Yes.
a reasonable amount. They'll say, "Hey, this is what I pay per month." I say, "What are your limits?" Nobody knows.
Uh-huh.
I'll do this with a room of 100 people. Maybe 2 people will raise their hand. I know my limits, right? People buy insurance the way that they buy salt at the grocery store, right? And,
Yes.
and this is not wise, but it is happening. So
Mhm.
how can we educate people without them saying, "Alex, this is why I don't want to call you. You scare me too much," right?
Right.
How do we do that?
Well,
What's our role?
I think it's changing the aspect, going from I don't want to call you because you're scaring me, or it's going to cost me more money.
Right.
But it's reason why. It's, again, providing advice and education and having a conversation. It's understanding the client. It's, Tim, what's important to you? So you have home, or you may have your home and a vacation home or whatever, right? You have cars. You have a couple of kids. What's important to you? What do you have? What are your limits? How is your home structured? How are your cars, your kids? And what's important to you?
Yes.
What scares you? And then understand what's important to the client, and then say, okay, I've reviewed your policies and they're accurate, you're fine. Or no, they're incorrect because your dollar per square footage on your house is very low, and your replacement cost or your replacement cost extension is at 20%. It's not going to be enough to protect your house if something happens. If you have a kitchen fire, or if you have a full-blown fire, or if you have a water pipe burst, right? On the liability side, the home is under a trust. So why is that trust not named as an additional insured? You're open from the liability perspective. Very important, especially in today's market in California, where you have capacity issues. You don't have a lot of carriers that are writing new business, and a lot of the policies have to go to the non-admitted market. And let's say you have someone that goes into your house to clean the house twice or 3 times a week, 20, 25, 30 hours a week, right? Do you have domestic workers' compensation?
Okay, now you're starting to scare me. Okay, this is what Tim said.
Well, yeah,
All
and-
these things that come up, yeah.
Exactly. And if you don't have domestic workers' compensation coverage because your policy is in a non-admitted market, which by definition, a non-admitted market should not offer domestic workers' compensation, because domestic workers' compensation coverage has to be through an admitted market in
Wow.
California, then you're wide open, right?
Yeah.
If something happens, if the lady cleaning your house, domestic help is helping you clean the house, or if you have a nanny or an au pair that some clients do,
Sure.
what happens? Having those conversations. If you have a nanny or an au pair, do they drive your car? No, they don't drive my car. Okay, but do they drive their car while they're going to the grocery
Run
store
some
to
errands
buy
for
it?
you.
Exactly.
Yeah.
So if that's the case, you may be on the risk if something happens.
Oh.
But all of those things is through having a conversation with them. If you go to an internet and you go to Geico or you go to Lemonade, those things, they don't tell you about those things, and you're not aware. And then you may say, okay, I want low limits, right? So if you buy low limits on an automobile and you are into an accident and it's your fault, probability of you having issues are very high. If you buy low limits on a home liability and you have a pool and you have kids, I would be worried. I want to have high limits. Also make sure that you have the necessary coverage limits on your underlying policies, your auto, your home,
Yeah.
so you don't create a gap in coverage between those policies and your umbrella, because your umbrella policy will have minimum required limits. So but all of those
Man.
things are having conversations with the clients and educating and understanding what's important to them versus going into the internet and just say, I'll get a policy.
Yeah.
I feel like it's almost like an annual meeting where if I'm a broker, I'm gonna say, Alex, let's recap for the year, man. What's going on in your life? And as you start to tell me what's going on in your life, I start to go, okay, coverage, liability, risk. These are the conversations I need to have with you because now I'm learning more about your life because life will change every single year. Right?
Exactly. It's having those conversations in an annual basis. Some clients like to have it quarterly or semi-annual because there's a lot of things changing in their life or in the structure. But it's having those conversations prior to renewal, because we do prior to renewal. These are your new terms. Can we go to market? In California, it's almost impossible right now because of the lack of markets. But we go to renewal and having those conversations. What has changed in your life? Oh, well, my son graduated from high school. He's now in college. Oh, and by the way, he graduated from high school and went to college, and we gifted him a watch.
Yeah.
Okay, is that watch a Rolex watch? Is that watch insured?
Sure.
Right? So, or I forgot to tell you, which it happens. It does not make a lot of sense, but it happens. I forgot to tell you, and I just bought a second home and last month, and I paid cash, and I forgot to tell you.
Yes.
Well, that home is there. Granted, that's a certain segment, right? But for someone like me, I would say something like, my daughter just got her driver's license. She went from permits to now driver's license. Okay, so we need to add her. Right? We need to add her on the policy. We need to add her on the umbrella to make sure that there's no gaps. Yes, unfortunately, it's going to cost you a little bit more money because it's a young driver, no driving experience. But you rather pay that premium, especially with young drivers. There's probability of them getting into something.
Yes,
pretty
exactly.
high, right?
I've seen it happen.
And then you as a dad, you're on it.
Yes. Alex, look, we're going to jump into some wildfire stuff here, right? But I'm so intrigued with the non-admitted carrier. The non-admitted carriers, their market is exploding here in California. Okay. So these non-admitted carriers are providing insurance, but this is the first time I've heard about the example you just gave about some of the things that they don't necessarily pay for. And it doesn't have to do with wildfire, but if you have an au pair that's working for you this many times a week, you have some gaps. And so what other gaps could you share with the audience as to when you compare admitted carrier to non-admitted carrier that traditionally they don't cover?
So depending on the non-admitted carriers, right, there's certain differences. A lot of them do provide the same coverage, but your coverage limits are not as broad. And your policy verbiage is not as broad as your admitted carriers, right? And one thing that it does not cover, for example, an admitted carrier, they will offer you liability and medical coverage as part of the policy. But what we were saying is your domestic workers' compensation is part of your liability package, right? So you don't have coverage for that because, again, domestic workers' compensation has to be through an admitted carrier. So what a broker should do and should advise is we will place a non-admitted carrier, like, for example, like Lloyd's of London.
Okay.
We would remove the liability and medical coverage from the policy, which will save you a little bit of premium, and then you obtain a comprehensive personal liability policy through an admitted carrier, where you have your liability, your medical, but that's where you pick up your domestic workers' compensation coverage. And then you are within state statute, you are within compliance, and you have the coverage, right? Because even, let's say you don't have an au pair, but if you have someone going in even 10 hours a week, which is occasional, and they get hurt while doing their job, then you can be on it. You would be on it if they pursue a lawsuit or go to an attorney, right?
Right.
So you have occasional domestic workers' compensation, and then you have part-time and full-time. If you have a part-time or a full-time, it's a good idea to call them out and make sure that you are rating for it because you have that coverage. And occasional workers' comp, someone that goes into your house once or twice a week, 10, 15 hours a week, then by the occasional workers' comp, you are covered. But
Wow.
also a non-admitted, for example, a non-admitted carrier may not have the extended replacement cost on a structure that an admitted company may have. An admitted company may have a 20%, a 50%. Other carriers may have 100%.
Right.
Your loss of use coverage is obviously reduced versus other companies that have much broader loss of use, which now they've tailored it down for obvious reasons because of the fires that occurred a couple of years ago. But it's still broader, right?
Yes.
Coverage, you have such coverages as mold coverage. You have options to buy additional mold coverage. Backup sewers and drains, you have higher limits than your non-admitted.
Yes. I think as a broker, you have to become like a wizard, meaning that you have to figure out, because you are looking at people's risk and it's on you. And I think for me, it's like, I really do want people to, people are so fast to say, my agent, my broker should have told me. But when they do tell you, it's up to us to act on it, right? But we need people like you to share the exposure, and then it's up to us to decide, what are we willing to do? What are we willing to risk? And our tolerance is different from individual to individual. But I feel like, Tim, do you have a different word versus wizard? Because I'm thinking like, look, you're having to position everything in such a way that the customer still feels protected, because now it's not one company, it's multiple facets, different numbers, different companies, different positions, different policies to give the customer what they had before.
Exactly, and it's much more difficult in today's market here in California, because now in certain areas of the state, in certain areas within Los Angeles, you have to, what used to be one policy, a homeowner's policy, now probably you will have to piece it into three policies, which is at worst a California FIR plan, then a difference in conditions policy, and a comprehensive personal liability policy, right? But all of that is to what we were discussing at the start. It's having those conversations with the clients, understanding what's important, and then going to market, advising them of what they currently have, what they can have now because of current market conditions, and the options. And just putting all the options out there, explaining the options to the client, and ultimately the client is, or the prospect is the one that decides what they want to do, right? And how they want to act in basis to each individual coverage. It's the same conversation with when you have with primary flood or with earthquake, or for someone that has condominiums, they want additional coverage for loss assessment in case of an earthquake, or just a basic claim for loss assessments when living on a condominium, because that's a very important coverage to have when you are a condominium owner and there's common areas, right? And there may be issues for common areas, whether you have a water loss, a fire loss, an earthquake, and probability of you as a condo owner being assessed is pretty high in case of a loss. So does the loss assessment coverage in your policy, is it adequate? And if it's not, provide additional terms. And it comes down to a conversation with the client of saying, no, I feel comfortable with the policy, I feel comfortable with this coverage, or yes, I want X or Y. It sort of becomes, it used to be 2 or 3 years ago when there were a lot of admitted carriers playing and the market was open, that it was more of, think of it as a menu, right? Now, because of market conditions, it's very, very tight and very difficult, and up to some extent limiting. But at the same time, there's a couple of coverage options that it's just providing them, offering to the clients, explaining the coverages, and it becomes the client's decision of how risk averse they are.
Yeah. Wow. Look, your job as a broker has become more difficult. in the last few years, 100%.
It's pretty challenging.
Yeah.
Yes. Uh-huh.
So as we dive into the wildfire problem and the wildfire coverages, let me start by asking you, what do you think? State Farm made this announcement. AIG left a year and a half ago or so, a couple of years ago. Farmers Insurance has non-renewed some condominium complexes over in San Diego. Now, Nationwide is taking the position this week of non-renewing certain areas of risk. What's happening? Like, what do you think the issue is with these admitted carriers saying enough is enough? Is it climate change, or is it the political issue with the Department of Insurance? What's happening here, in your opinion?
Well, my opinion, not to get political.
Yeah. Okay. Well, yeah.
But I personally think it's both, right? If you believe in climate change, which I personally do, the fires that we've had the last 2 or 3 years in California, they were one in, I don't know, 1,000-year event, right?
Right.
The fires that you are having now in Canada, the heat wave that you had last year in Europe, right? The fires that you had in Australia. So I do believe that there's something to be attributed to climate change.
Right.
Absolutely, right? And then also, especially here in California, I do think that there's been a lot of carriers, because of the climate change, the brush wildfire issues. There's been a lot of losses. There's been a lot of claims. It's hit the insurance companies in their loss ratio. There's this incredible rate need on homeowners, as well as other lines of business, valuable articles,
Right.
automobile, et cetera, et cetera. There's this incredible rate need that insurance carriers need in order to make up not only the losses that they've paid, but to be adequately priced, right? And if insurance companies are unable to be adequately priced and obtain the rate need that they need to keep conducting business in the state for whichever line of business, then there comes a point where they say, if I can't get the rate need and I'm losing 10, 15, 20 cents per dollar, does not make sense.
Right.
It's just, the business model does not make sense, right? And a lot of it is the fires. A lot of it is attributed also to water losses. So it's, at the end of the day, is rate need. And if the departments of insurance are unwilling, because they're able to approve rate need, but if they're unwilling to see the rate needs that the insurance companies have, which the insurance companies provide in their filings, their pricing triangles, their rate need, their frequency need, their factors, all of that stuff. So they have the backup data of how the pricing is trending, and they're unwilling to provide rates. Then it comes a point where an insurance company, as a business, they have to say, it doesn't make sense for us to keep going forward and providing new policies or even exit the state, right?
It's so interesting. I think for the business owners that are listening, I think this rings true for us. Tim and I had to make a decision recently with a certain carrier that when you say rate need, I'm thinking the same thing. Here's our rates, and they kept wanting to pull us down, saying, hey, Johnny that works out of the garage with no workers' comp and no liability insurance, he can do it for that price. And they're trying to compare apples to bananas, and it's incredible. And so we had to make a decision. We're done. We will not play in that sandbox. And I feel like these carriers are doing pretty much the same thing. And they're saying we need to protect our shareholders, our employees, because without profit, we can't continue. And to me, I kind of honor that position. It feels to a consumer like a slap in the face, and you can kind of see that playing out on the news. But the reality is, from a business standpoint, it doesn't make economic sense to continue that way and lose money, because then there'll be no company.
Exactly, and it's putting pressure in the market, right? Because if you have admitted companies saying, I'm either going to non-renew and non-renew and not write new business policies, or just companies saying, we will keep our existing book, but we are not going to write existing policies. the market is contracting.
Right.
So then you have the non-admitted companies that have availability, right?
Right.
Which they have more flexibility, both from the pricing and underwriting perspective, right? So we'll say, okay, I can price, and I'll price X amount for the risk. And if you, consumer, are willing to pay, then we'll write you a policy. But now it's creating so much pressure because there's not enough companies writing that those non-admitted carriers and syndicates, they're reaching capacity.
Wow.
So now you have areas where, for example, in Los Angeles and the flats of Santa Monica, which everyone wants, you're somewhat away from brush, wildfire.
Right.
You're in the flats, you have a fire, a house, fire station, 1.5, 2 miles. Even it's a new home, so it's earthquake retrofitted. It has all the water pipes.
Probably fire sprinklers too.
It's everything, right? And you have clients saying, find me insurance. You have some clients saying, I don't care how much I pay, I need insurance.
Right.
But you are unable to provide insurance because of capacity issues.
Explain this
you have to
capacity
get
if you could.
You have to get creative, right?
Yeah, I was going to say, help us understand capacity. So when you say capacity for a non-insurance person, what do you mean by that? Explain that to the viewers at home.
I'll try my best.
Yeah.
Thank you. So you have insurance companies, right, that have X amount of dollars that they can write.
Yeah.
Right? Or X amount of exposures that they can write. And they're backed by reinsurance companies.
Mm-hmm.
There's a treaty between your insurance company and your insurance, between your insurance and your insurance company. And then if you reach that treaty in regards to capacity, in regards to coverage dollars that you have, then always the insurance companies can go ahead and try to renegotiate an insurance treaty, reinsurance treaty with their reinsurance. But now, what was, I don't know, I'll just throw a number, what the reinsurance was charging, let's say, $1 for X amount, they're going to be charging now $4 or $5.
Mm.
Yes.
Right? Because the risk is that much more. Because now their capacity in a small area is that much larger, and if something happens, the risk is huge. So then it becomes a question of the insurance company saying, am I willing to pay 3x or 5x for insurance to write homes in this area where the premium is going to be so high that either no one's going to buy it, and then we're going to be open, right?
Right.
For this additional price. And they're trying not to play that game. And some of them are saying no because it's too expensive, we just can't afford it.
Right.
Because it throws their entire model out there, combined loss ratio factoring out. So that's what's creating capacity issues, and the insurance companies are coming back and saying, well, although it's a great area and we would love to write your home in this area, I don't have any more capacity.
Wow.
I cannot put anything because it goes against the treaty, so there's no way that I can bring that location into the books.
So we have a situation on one hand where insurance companies cannot write insurance that can actually turn them a profit or keep them even from losing money because of regulation. And then you have the non-admitted side and the reinsurance side saying that even if I wanted to write the insurance, even if I could afford to write the insurance, I can't because I'm at capacity.
Yes, and that would apply to both admitted and non-admitted. But
Yeah.
they're at capacity.
Yeah.
So they can't put anything else in the books.
Yeah. So what's the answer?
Exactly.
No, so,
Let me throw you a softball.
so today I know that there's a growing sense of pressure. So on LinkedIn, I'm seeing a lot of brokers that are communicating, hey, on the regulation side, something needs to give. And I know we don't want to get overly political here. We don't run the Department of Insurance, but today there's a call you were mentioning to me with the carriers, I believe. Is this something we can talk about?
I don't know very much about it because
but
but there's going to be a call of the California Department of Insurance, I believe, of the status of the market, addressing probably the exit, or not the exit, but a couple of insurance companies announcing that they will not be writing any more new business, right? I think they're going to address that, and hopefully they'll address a plan or a strategy on moving forward of how they think, or a couple of steps that they're hopefully going to do in order to be able to ease the market tension.
Yeah.
Hopefully.
But we will see. I don't. You know, at this point, you know as much as I do.
Sure.
I think, from the wildfire and the insurance perspective, I start to think about with the creativity that you have the admitted carriers are leaving, but you have the non-admitted carriers are providing lower limits or different options, and brokers are doing the best they can to give this soup of options to the homeowner. Mm-hmm. And the homeowner may not take certain things, or they might say, I'm going to take that rate absent of the policy coverage. They're just looking at, I'm willing to pay $10,000 a year, or high net worth language, $400,000 a year. And I know that I'm only covered in my estate of $40 million. I'm only covered for $25 million. Mm-hmm. I believe that in this next wildfire event, whenever it is, there are going to be so many homeowners in a lot of pain because of their lack of coverage, mm-hmm. their lack of limits. And if they're tied to the California Fair Plan, holy smokes, I feel like the entire state is going to be screaming mm-hmm. for something to absolutely change, because now a homeowner who thought they had enough coverage to rebuild their home is now having to move because there's no way they could afford to rebuild it. And there's going to be so many problems. I can see that coming.
I think so, but that's why you have the conversations with the clients and you educate them, you provide them the options. And a lot of clients, because of the premium amounts, they decide to up to a certain extent self-insure a certain amount, and they are aware of the self-insurance, right? A lot of policies right now in certain areas, you can insure the home, but you have, for example, high deductibles, all peril deductibles. You have brush, wildfire, smoke deductibles. You have some brush, wildfire coverage limits that they would pay up to a certain amount in case of a fire loss.
Well, let me slow you down, because I feel like people need to hear this, because I need to hear it again for myself. Are you saying that if I'm a homeowner and I have a deductible for my normal perils of wind, water, etc., and my deductible is $25,000, I have a separate policy for wildfire with a separate amount of deductible and coverage?
Not a separate policy.
Okay.
Within the same policy, you have your all peril deductible, but in certain cases, depending on the home, the location,
right,
insurance companies, primarily non-admitted, they would say, here's your all peril deductible. You have a fire deductible, or a wildfire deductible, or a smoke deductible, which is a percentage or a certain amount. In certain cases, for example, you are also seeing that if the home has had, let's say, a water loss, you have a water damage or a water claim or a water loss deductible of a certain amount.
Right.
And that's the flexibility that non-admitted companies have, amongst other flexibilities, non-admitted companies amongst admitted companies. Because the admitted company, if they want to implement those deductibles, they have to file them to the state. And California is, you file, they get approved, and then you can use the changes, whether it's rate changes or underwriting changes.
Wow.
So that's a difference. So going back to what you were saying, it's the conversations that we have with the clients. How comfortable are you? Some clients say, well, I'm going to self-insure above X amount, right?
Right.
And then part of the conversations that we have with clients in certain given areas where there's brush, wildfire exposure, which now By the way, there's areas in the flats of Los Angeles, like flats of Beverly Hills, flats of Santa Monica, Brentwood, et cetera, that you are not backed into a brush wildfire section.
Right.
You're in the flat, so there's no brush in reality, but it's considered brush wildfire area because of the flying embers.
Yeah.
And the flying embers can go into your house and burn the house, right? Because of the wind patterns, which now insurance companies are tracking.
Yes.
So going back to your comments about self-insurance and advising and having the conversations with the clients, a lot of things that we as brokers do, or we as Hoffman Brown do, Hoffman Brown / Aquasure, is I'm meeting with you, you're in an area where there's brush, okay. Nowadays, we have to have conversations with the underwriters to get them to look at the location and make them feel comfortable about the location and how preemptive we are being in order to minimize damage. Fire damage.
Right.
So the conversation, I would go to your house and say, okay, let's walk around your house. How much clearance do you have? What can we do to clear, to increase that clearance? What type of trees do you have backing into the house? Do you have pine trees?
Mm-hmm.
Those
or
are like
Italian
little
cypress.
matches,
Yeah.
right? I'm thinking in Spanish now. It's birch, right? What you put underneath.
Mulch.
Mulch.
Yes.
Thank you.
Yes.
So the mulch, I mean, if you have a flying number there, it's gonna pick up. So educating them and having those conversations. Do you have a pool and you back into brush wildfire, right? So you may think of there's systems that are available where you have generators and fire
pumps. Yeah.
So it's educating them and being able to have a conversation of what steps we can do to mitigate damage, where then we can go to the underwriter and say, okay, we have this home, so we need insurance, and this is what the prospect or client is willing to do to mitigate. What can you offer terms? Let's find a middle ground, because also when you take everything into perspective, yes, it's the home, we're insuring the home, but guess what? Your automobiles are garaged in that home, right? If you have valuable articles, fine art, it's probability of some of the art, if not all, being on that home. Your jewelry is in that home. So then it's not only a homeowner's policy issue, it becomes a valuable articles issue. It becomes an automobile issue. So it's, but it's the education and having the conversations with them.
Yeah. Man, I've got a bunch of thoughts going through my mind, but the one thing two things. Number one, the insurance companies are asking, and in some cases requiring, homeowners to share in the risk. And if I'm a homeowner and you come and you say, hey, OP, you're going to need to do ember resistant vents, gutter guards, spray frost check around the perimeter vegetation, clear off vegetation, then OP, you'll have a better chance of getting insured. I'm going to do that work so that way I can show you, Alex, and you can go to market to say, this homeowner has invested this amount of money, this amount of time, these resources to help prevent wildfire. Would you accept him? And I love that idea as homeowners that we need to empower ourselves to look more attractive for the risk. Because if you're going to compare me to 20 other people that have done nothing, I hope that I actually stand out, right? Exactly. And that people want to insure me. So I love that aspect of it. The other comment I wanted to make that really caught my ear is you talked about wildfire coverage, how it's a different deductible, same policy, but you also said smoke. And so is wildfire coverage, when you say, when I think wildfire coverage, I'm thinking, okay, fire damage to the building and smoke and contents and everything else. But is there another one for smoke also? Are you seeing that?
In certain cases, we see that. Again, we see it on the non-admitted and depending on the location, right? Because smoke, there's a fire, knock on wood, your home is fine,
Right.
right? It does not have fire damage, but the smoke that flows with the air, etc.
Yes, absolutely.
And even if you have your windows closed, there's ways that smoke can get in. And smoke damage, smoke smell, smoke damage on furniture, on the walls, which permeates, on clothing,
Insulation, clothing, all of that.
That has to be remediated. That becomes a claim,
That's right.
right? So you have to be aware that there's this possibility of a claim, and the insurance companies, depending on their models and depending on where the house is, they'll say, well, yes, I'll provide terms, but these are the items, right? These are the terms that I will provide. These are the deductibles that I provide. In some cases, it's not only a deductible. In some cases, I'll have this deductible, and the most that I will pay in case of a fire is $500,000 or $1 million, which is very different. It's a different limits than your overall home limits, right? So it's having those conversations, and it's advising the client of possible claims, because a couple of years ago when we had the Malibu fires, a lot of homes went up in smoke, right? They got burned down, but also there were a lot of homes that had smoke damage, which is very intrusive, and it's difficult to remediate. You need special. Well, both of you know this.
We were busy.
Machines,
right? Absolutely, we were so busy with smoke cleanup.
Well, not only that, but there were a lot of predatory practices going on. Yes. I remember after the Skirball fire, when we got into Bel Air, there was a PA outside, a public adjuster outside, and he had one of those arrows like you see the guys holding outside of like sandwich stores where they're throwing them in the air, and literally like arrows saying, "Call us, we're a public adjuster." And I'm just like, wow, this is starting. And look, I understand why public adjusters exist. I understand their function and their utility. But I think a lot of those soot and ash claims became much larger than the carriers were prepared for.
But if you have a claim, and if you have a relationship like Hoffman Brown with Ally,
right,
which we know that you guys are gonna come in and you guys are gonna do the remediation, and it's gonna be the right thing, then it also provides that sense to the clients of we have a very good broker, because not only are they protecting us, but they're providing us the tools to remediate to fix the claim, and if need be, for fire protection or fire mitigation before something happens, to protect the house, and nowadays to have conversations with underwriters, we can refer to our clients people like you that they know the stuff, they know how to remediate it, they can provide the tools needed, right? Which in our world, that's what we do. It's again, advice, consultation, and provide the necessary tools to protect the client's assets. At the end of the day, that's what we do.
Alex, I think about when you just said, you're a trusted advisor, and not only do you help people with prevention, but you also have a team that helps them with restoration, remediation, to get them back up to normal. And I remember, I forget the year, it was in the 2000, maybe 18 or 17, Tim, where Steve Brown, was he the president owner? He was the owner, right, of Hoffman Brown at the time.
The owner.
And so, by the way, he's an icon, right? Every time we talk to other brokers and we mention his name, they just hold him to just a high regard. And I'm like, wow, how wonderful is it to have that great of a name after all of these years, where even competitors say, wow, that is a stand-up human being.
You could make the arguments that I have a bias.
Well, yeah.
But obviously, I work for Steve Brown. We work very closely in Hoffman Brown and now in Aquasure. We work very closely, and I do consider him a friend. And like you said, you can't say enough things for him as a human being, as an individual.
He's a quality person. And so I remember the wildfires hit in the Beverly Hills area, and Steve calls me up it was a weeknight, and he says, OP, I have clients that have been evacuated, and we're going to need your help. And I said, I'm here for you, Steve. He says, okay, I don't know when the evacuations are going to be lifted, but can I call you at any time because I want to meet my clients when they go back to their homes? I said, great. He calls me probably 6 a.m. in the morning on a Saturday and says, OP evacuations are lifted. Tim, myself, and Stuart, our general manager, now at the time he was just a project manager, we meet Steve out there. And Alex, it's so amazing. These clients saw him as a friend, hunt him. They just like, Steve, great to see you. And we walked the job. And he literally went from one house to the next, to the next, to the next. I don't know, probably 8 or 9 clients that we saw that day. And all he said is, here's Allied, they're going to help you out. They're going to help you out. And so it was really neat to see that you're right. Selling the insurance is one thing, but becoming the answer for the stress that the client is feeling and helping them get back to being whole again is part of the entire selling process. Not that Steve was selling, but you could tell he was very invested in the individual. So that was so intriguing to see. What comments do you have on that, Tim?
Yeah, I think insurance is one of these products that most people buy hoping that they never have to use. It's one of the only things in the world, right? But they continue to buy it, and the ones that buy it from trusted advisors that they remain close to are properly insured. I think one of the biggest challenges with property owner insurance or property insurance is that most people never use it. And if they do, maybe it was for a small claim and it was negligible, right? But I've had the blessing and the unblessing of helping many homeowners after they've lost everything that they've owned. And if it wasn't for insurance, those people would probably be homeless. Those people, a home, whether you are a high net worth individual or a regular middle market person like us, is oftentimes the most important investment that people will make.
Yes, and it's interesting because insurance is something that's not tangible. You cannot, touch or feel or anything like that. And a lot of times people are paying their premiums and they see the rates go up and increase, and it's like, I'm doing this, I'm just sending money, and I don't have anything. I'm not touching, I'm not smelling, I'm not tasting, I'm not doing anything.
Where's my return on the investment?
No thank you card. Yeah.
And unfortunately, hopefully nothing happens. But unfortunately, when things occur, that's when you realize, okay, it's a good thing. And it's also why, to what OP was saying, that's why it's good to have semi-annual or annual reviews. That's why what we do is at Hoffman Brown is we go and we place coverage. We try to, at the inspections, we try to be on every single inspection, or as many as we can.
Right.
If there's a claim, whether it's fire, whether it's water, whatever it is, we try to be present. I would be lying if I would say we are present every single time.
Of course,
it's impossible.
It's difficult. Sure.
But we try to be there. And then also, because we want to think that we are good advisors, trusted advisors, we have a group of people or a group of companies that we partner with the same ideas, the same service standards to what our clients need. There's a claim, I need to get evaluations on my jewelry or on my art. There's referrals that we provide, right? I'm moving from this home to this home or out of state. What do you have a specific mover? So we try to be involved as much as possible, as much as the clients wants us to be involved, but have the necessary tools that we can refer to. Obviously, it becomes a decision of the client, right? But have companies and people that we can refer to, people that we trust, and that not only that we trust, because it's a two-way street, that they trust us with the quality of work that we do in order to provide a good service to the clients. Because we have middle markets like me, which it should be the same service as the high net worth, right? Yeah. Because also there's a couple of people that high net worth, that you're not only dealing with the individual or the family, you're dealing with family office,
Right.
you're dealing with attorneys. So it gets a little bit more complex.
Right.
But ultimately, the focus and the service and the attention should be the same, no matter
Yeah,
who the person is or
for sure. What the risk is.
Yeah.
Yeah.
So Alex, early in the conversation, we were talking about, watercraft, insuring watercraft, insuring aircrafts, and now this is a high net worth conversation. Fine arts, collectibles, but I wrote down Ransom Insurance.
I'm sorry?
Ransom Insurance.
Ransom.
Yes. Is that something that is happening? Meaning that are more homeowners, high net worth individuals concerned about that? Because when you start talking about your children go to college, that's more exposure, right? Especially if you're an ultra high net worth client, holy smokes, this is an issue. Is that something that is becoming more popular?
To be frank, Opie, we have seen it just a couple of times.
Okay.
We do not see ransom insurance, at least from our perspective. We have not seen that request often.
Good.
Forget about often. We don't, It's very seldom. Have we seen it? Yes. But it's very, very seldom when we see those requests.
Got it.
And there's different policies that provide ransom to the individual, to the family, to people who are with the family at that given time, like an assistant, et cetera. But at least what I've seen is very, very seldom. The product is there, it's available. I don't think we have a lot in our books.
Got it.
Have you ever seen a parent say, "I just want to insure 3 out of 4 of my kids"? This one? No, just kidding.
Yes.
That probably happens.
Probably there's some families.
Oh, that's
yes.
too funny. So another aspect of insurance that came up yesterday, we're working with a high net worth contractor. All he does is rebuild. He builds new homes and then does massive remodels for these types of clients. And he was talking about how this one individual has this massive wine collection. And I thought, holy smokes, because we go into these homes, Tim, and these are refrigerated, and it has to be at a certain temperature. And if that temperature changes, we have problems, right? Because this wine collection is so valuable.
Yes.
So I'm sure that's part of the equation too when you're dealing with these types of policies and the different things that have to be insured, right?
Exactly. So your valuable article policy, they not only insure fine arts, which you can insure home, different locations, different areas in the country, even worldwide, and they have transportation. Not only do they insure that, nor jewelry. We have people that have baseball card and baseball balls collection.
That's right.
Every type of collection, including wine, including whiskey.
Right.
You can get creative with, for example, collectible automobiles, where the liability you write on an automobile policy, because collectible cars, you drive them very seldom.
Right.
100 to 100 miles a year. So your liability risk is very, very low. And then you have your everyday use vehicles there. And then the comprehensive and collision coverage, you do it on a collection policy. Which has broader coverage than the auto policy. But in regards to wine and whiskeys, but wines, yes, there's clients that have extensive wine collection, and you insure the wines. You can blanket or you can schedule, but it's not only the temperature change which can create damage. For example, if there's a water pipe burst,
yes,
and it goes into the wine cellar and the bottles get wet, right? The water's not going to go into the bottle, but the label gets damaged, or they
cork
separate.
too, right?
In certain cases, a cork. But even if the label gets separated, that bottle of wine has lost its value.
Oof.
So
that's where I come in and go, hey, I'll buy it for 10 cents on the dollar.
Exactly, and you get incredible wine, right? You get great tasting wine, but
Yes.
it's taking care of the wine.
So many
and there's
things.
wine collections that are extremely expensive, and there's wines that you have a certain amount of bottles in your house, but then you're part of a wine club in a certain cellar in your town,
Right.
so it provides that coverage as
Interesting.
well, which you want to ensure, because if you are part of a, let's say, a wine club and there's a wine location, or even if you have your collectible cars on the garage, right? Those locations are going to have their liability policies, their general liability, but they're insuring cars for a bunch of people, right? There's cars of a bunch of people and different values of cars in that place. Or for wine, you have different collections for different people. So if there's a large loss, whether it's water, fire, or change in temperature, et cetera, what's the probability that that location's commercial liability policy is going to cover all the collections for everyone that has their collection there?
Wow.
They may not have enough limits. So that's why you want to make sure that on your policy, you have the necessary limits covering your collection just in case. And again, it's part of the conversations that you have with the client.
Yeah, I wanted to ask you about those conversations because I know that, we get called out after a claim occurs, right? And we enter these homes, and these are oftentimes high net worth insured. Sometimes they're celebrity clients that are very concerned about their privacy. And so when we first enter the home, I think that I tend to sense there's a sense of not distrust, but not trust, right? It's like, we're going to see who you are. For your business, I imagine your clients have to expose a lot of their assets to you. Right? They have to tell you,
Yes.
They have to be very open with you. What, for people listening to this that might be scared to trust an insurance person that much or trust anyone that much, right? How do you build that trust? What recommendation would you give for a person in terms of how do I find an insurance person I can trust with all this information and all this risk to take care of me?
Well, first off, for the way that I look at it is, I'll do it in two levels, right? One is someone like myself. I go ahead, I look brokers up, I have conversations with them. I talk to people that I think may have a relationship with brokers, get a sense of what they feel about the broker, then I have conversations with them. And if I feel comfortable of not only the person, because you have to, I think, I don't know if building a bond is the right way to explain it, but building a relationship where I feel comfortable and I feel that I can trust this person, not only the person, but the company, the brokerage house, then we can have, I would feel more comfortable having that conversation of what I have, how I have it, the titles, things that I would probably not have, conversations that I would probably not have with a CPA or IRS or whatever, right?
Yeah.
In regards to art or whatever. For the higher end client, the high net worth, in many, many cases, I think most of the cases, by the time we have a conversation with the clients, we already had a conversation with the referral source. We had a conversation probably with a CPA or an attorney or a family office.
Great.
So we've had those conversations. So you've already gone through 1, 2, or sometimes 3 layers, right? Which by the time you get to the client already knows that his group feels comfortable about you. And also, you already have a lot of the information.
Yeah.
So when you get there, it's more of a conversation. This is what I know. Probably I've reviewed your policies. This is what I've seen on your policies. This is what I don't know. So now let's have a conversation of what's important to you. And am I missing anything? I would like to understand more of X or Y to make sure that I am not leaving any gaps in coverage and I am not seeing anything. And so I can provide you the best advice possible.
Fantastic.
But it's
Interesting. Now, when we go into these ultra high net worth claims and celebrity claims, we are signing non-disclosure agreements. Are you also signing NDAs when you're gonna?
In some cases,
Okay.
with certain clients. But before we do the NDA, obviously it goes through
Right.
the process, right?
Right.
But yes, in some cases.
Yeah.
But also when we go, and that's, for example, reasons why we like to go to the inspections or to the claims. Because for two reasons. Number one, it's the service that we should be providing, right? And it provides that sense of ownership, and that sense that I know that I reached out to Alex at Hoffman Brown, that he is providing me the correct protection because he's here at the time of the inspection. At time of a claim, same thing, because that's when they need us.
Oh,
No, obviously, we write the policies and all that stuff, and we provide the coverage. But when the claim occurs, that's when the client needs assistance and needs guidance and needs help. So we're there for that. But also, for example, we're there. Ally comes in. We have a relationship. So although it's a very difficult time for the clients and very stressful for the clients, I would like to think that it lowers a little bit the stress level, right? Because they see that there's a relationship of the broker and Allied or whomever to make sure that everything is going to be done at the end of the day correctly and it's under control.
Yeah.
So, and it helps the client, it helps Hoffman Brown, it helps the third party because it feels more controlled.
Yeah.
I love it. Are there any other things, Alex, you want to add, or Tim, any questions you have? And Alex, I would say, what would you want to say to the listeners from the standpoint of what they can do in this very difficult market that I don't think is going to change anytime soon? I hate to say that, but I hope it does. I hope something happens this year where there's some really positive change, but we're in the wildfire season right now. Peak season is right around the corner, and I'm afraid of what's going to be taking place here, especially with the amount of growth that we have from vegetation with this massive waterfall that we've had from the rains in the past few months. But is there anything that you want to share with the listeners?
I think it's concerning of how much growth. I mean, it's great that we got so much water and we have so much greenery, and it looks nice. I mean, driving up and down the 405 and seeing everything green, it's like, wow, this is nice. But at the same time, I'm thinking this July, August is going to be, it's going to be ugly. It's going to be bad. So, two things that I tend to say and advise, right? And it's just, please note, it's just my perspective. One is from the homeowner's perspective, make sure that if you're in those areas, mitigate your brush as much as possible. Protect your home as much as possible. OP, you put a lot of information in LinkedIn of how to mitigate, which is extremely powerful and very helpful. And I think a lot of people, a lot of brokers that are linked to you should use that information that you provide, because again, it's providing information to the client on how to protect their homes, because they're not only protecting their homes, they're protecting their assets, they're protecting their family. So how to mitigate and protect the home and clear brush, be careful with those trees, the mulch,
That's right.
Me on the word, the eaves, all of those things, right? That's number one. And number two, we are in a very difficult insurance market. It's a hard market. It's a very tight market where ability for insurance, both home and auto, is difficult and up to some extent limited. So what I say and what I personally do, and I just live through it, if I have a small auto claim or if I have a small homeowner's claim, that's not gonna break my savings from my bank. Instead of putting in a claim, absorb the claim, because claim counts, claim frequency does affect not only price, but does affect renewals and does affect the availability. And right now that we're in a very tight market, if it's a small claim and I can absorb it without breaking my savings or my bank, then I rather take care of that claim, because either at the time of my renewal, it's going to be very, very, very expensive. Or at worst, I'm going to get a non-renewal. Which if I get a non-renewal on my house, or in today's world, on my automobile, it's going to be difficult to get a policy, and it's going to be much, much more expensive than the claim. I would say claims, I would focus on, if I'm going to do a claim on homeowners for the sake of argument, have it be a substantial claim. Now, the definition of substantial is going to be different for me than for you and for everyone else, right? But something that I can absorb, I would take care of myself. Hopefully, this market will change in the next 2 or 3 years. I doubt it's going to change next year or the year after. It's going to be very, very interesting with all the growth, how the fire season behaves this year. If we have a low fire season, probably like last year. Last year was sort of
Yes, it was low. It was,
Then we may see a little bit of a movement next year and then the year after. But if we have a bad fire season, I think it's going to be much worse. So the markets are contracting. It's difficult. I would just be very careful. Educate yourself. Have conversations with your brokers. Make sure that you're mitigating your homes. And also, I think it's very important, if you live in certain areas, make sure that what I do and what I advise my clients is have a list of providers that if something happens, you can count and you can make that call. Not only to fix whatever the issue is, but if something occurs, to be able to call that provider and be able to get someone out there and minimize the claim. And just educate yourself.
I love it. Anything else you want to add, Tim?
Yeah, I think that's I appreciate you being here so much, Alex. I think you're absolutely right. I know that we as service providers, when we're given the guidance, hey, we're trying to keep this from becoming a claim, we can get creative, and there's things that we all can do. So I think whether you're a service provider, whether you're an insurance broker, or whether you're a homeowner, we all have a part to play in hopefully mitigating this disaster as much as we can.
No, absolutely. And personally, I want to give the both of you thanks, because I use a lot of the information that you provide in brush wildfire mitigation and what to look for, that I provide my clients. And I advise this is what you should do. And if you need help, here's contact information. But I use a lot of your information.
Boom.
So
I love
thank
it.
you.
Thank you.
I love it.
Pleasure.
I think it's our responsibility to spread the word of prevention. And, to your point, a lot of these things that we talk about, people could do it on their own. You could just DIY most of this stuff. And in case you do need someone, great. There's people out there like us who can go in there and help. But it's not a big a cost as people think. To have these prevention measures to prepare yourself for the event of a wildfire.
Well, let me ask you. I agree. It's not as big a cost, but it's a cost. But do I rather have that cost and prevent losing my house, or having a large portion of my house gone, or not having, I don't know, a water loss, whatever it is? The way that I think people should see it is same way that you paint your house and you keep your house clean and nice. You have to protect your house. And if you live in certain areas, I think it's an investment to mitigate the surrounding areas to protect your house. So it should be seen as an investment.
Absolutely. That's a good way to put it. Well, Alex, thank you so much for joining us. I love it. Thank you for being a part of this podcast. And for you listeners, please share this, some valuable information for middle market and for high net worth. Overall, we're all trying to do the best we possibly can to see what we can do to reduce our risk of wildfire. So thank you guys so much. Peace out.
That's all for this episode of All Things Wildfire. If you like this episode, be sure to subscribe to our show and follow us on social media to stay up to date on all things wildfire. And as always, thanks for listening.